Hey, what's up, everybody? This is Evan Carthy from evancarthy.com. Today we are going to be looking at the Russell 2000 futures charts right here. And as we can see from today, when it opened the market, or when it transitioned over to today, July 8th, the market pretty much just went straight down all the way until about 8:45 a.m. Central Time. And then we had the pop back up over here. And the things I was looking for today is we had this setup going on right here, which never came to fruition. What I was looking for is for price to close below the green channel right here, and then we were going to be looking for it to fill the come down and hit the blue. But as you can see, yesterday it came close. Today it used it pretty much as support and then bounced right off of it. So it did create a really good trade based upon the 5 wave move over here, because as you can see from right here, you have the 0, 1, 2, 3, 4, and then you went to the 5 down here. So a trade I did take today was using the 3 to 4 wave and the 5 wave move right there. I looked to get in closer to the 2.618 level, but when I was looking at the charts and I saw the support right here, I was willing to get in, a little bit later as well if it kept on going down, but I wanted to get in right here because it was past the 1.618 level. So you can see from the arrow, I got in, I think, right about right here on it, and the goal was to keep it up until it hit the retracement level right up there, which is that box. Let me just show you the retracement level I was looking at to show you that the price was completed, or the move was complete. So that was the overall goal, to keep it up right over there. I got out right about right here, I think, a little bit early, just to lock in the profits for it. But turned out to be a real nice trade for that one right there. You see, price came up, filled it, so that 5 wave move is incomplete. So then I was looking for two other setups right here, which probably are not going to happen. At least one of them won't happen for tomorrow, if ever. It's using the inside pitchfork, using the 2, 3, and 4 data points on that 5 wave move. You can see it's shooting straight up right there. It's shooting pretty much straight up at greater than a 45-degree angle. So for price to really go up there and hit that, it's really going to have to take off here in the next day or two for it to go up there and hit that. So it could eventually, but tomorrow, that's not something I'm looking for price to rally. It'd have to go up from where it's currently at to up over there. So you're looking at a 12% move for tomorrow. So we'll go ahead and rule that one out from right there. But one trade that could happen tomorrow would be using the shift pitchfork from points 1, 3, and 4. Let me scroll here a little bit. What we're looking for this one right here is for price to break into the blue out of the green right there, and then we're looking for price to go up to the top of the blue line, and that would be completed for that one. So for that one to happen from where it's at, that price would be quite a bit. Yeah, it more than likely is not going to hit that right there, because just even break over it sometime tomorrow, you'll be looking at over 4% upside move for tomorrow. Don't think that's going to happen either. So that's one we will be looking at, or I'll be looking at going into next week. So it's just something to keep in mind right there, and that's why I have these. That's why I have. Excuse me, real quick. That's why I have them highlighted over here with the triangle, just so it keeps me. Keeps me notified that there's a potential setup that could be happening, and that's why I have this one, which is this inside pitchfork right here. But not looking for this one to get filled either for tomorrow, because again, from there, you'd be looking at another 4 to 5% drop either way. So going into tomorrow, there really isn't anything super necessary that I think's going to happen. Like I showed a second ago, we have that long upside target. We have the short downside target way down here, but each of those are 4 to 5% each way. And so I just, obviously that'd be a huge move, especially the upside. So I don't think that's going to happen. So that's what I'm looking forward in next week. And then looking for any 5 wave moves going to the upside. There was one I was looking at right here. It was looking like it was getting started up, but then you can see the zero line right here. But this little bar came back and ticked it right there, went right below it, so that messes that up. So in order for this to be a 5 wave move moving back up, what we would need to do, there's 1, 2, 3. We need to break this high right here of 22, what is that? 2251.6. We need to break that high. So we break it somewhere up there. And then we need it come down to the 38% line, which should be, who knows, right around there, and then go up and create that 5-way move right there. So we need to break this high, have retracement, and then go back up there and break it again. So that looks something like, say that's the high right there. Yeah, come down to the 38% to lock it in, and then up here to the 1.416 to get it, and then we could start looking at some of those other trades as well. But that's really the only, I believe the only 5-way setup right here, at least to the upside. To the downside, let's see here real quick using this. And there's the 0. There's the 1. We'll go ahead and put a black line on there to signify that that can't be broken right there. And then let's see here. Do we have anything retracing back up to the 38? Okay, that one traced it back to the 38 right there. So if price uses, if this price right here doesn't go and break this bar right here, where the high of it is 2,229.9 right there, and it comes down and hits, let's see, where's the arrow? Comes down and hits the 1.146 right there, then this would be a 5-way move right here. Let's go ahead and mark that up on there. Oh, that's the wrong one. Come back here. Fix that. There we go. So that's the potential move we have right there for the 5-way move. But if price comes up and breaks this 4th point right here of the 5-way move, which the high is 2229.9, then this would get moved down to the 3rd point. This would go up to where the 4th point would be, but it also have to stay below this black line right here. If it goes up, that 4th point busts the 1 point right there, then this is an invalid setup. So currently that's what we're looking for it. Obviously this is going to change a lot before the market opens, but that's the current setup we're looking for right now. And if that does happen, then we'd be looking at the 3 to 4 point trade setup right there, looking for prices somewhere get down between 1.618 and 2.618 to go along with it, and then we'd be looking for the other pitchfork trades, use the inside point pitchfork 234 long side setup, and then using the shift pitchfork 134, another long setup to the upside right there. So yeah, that's pretty much. Let's look at the 50 and 200 EMA right here as well, because typically when you get the crossovers, that's when you're going to get the big moves happening. But as we're seeing right here, we had to move to the upside, then move to the downside. So right now, it's just gyrating around right here. This is just going to be a lot of congestion until it decides which way it's going to go right here. Because when you have the crossover and you get that big move down right there, like there's a crossover, came back up, and then ever since then, 50 EMA up until later or earlier today, it just crossed over right there to the upside. And typically when you're getting like a lot of crossover, like there's one crossover, there's another crossover, all you're getting is in a bunch of congestion over there. There you had one, you had moved down, there you had one up. So that's how I use the 50 to 200 EMA. Sometimes I will take a trade out of it that I mentioned the other day, where when you do get that crossover to the upside, what you do is, let me get the Fibonacci level. You just take it to the lowest low before you had the 50 right here that broke over the 200. Go ahead and attach that to the top right there. Let's get this thing out of the way. So then what you look for is you look for a price to come down at least to the 38% right there, and your target's going to be the 1.146 up here to the upside right there. So there you have it down there. So we'd be looking for price to go up to that price target right there. The stop loss I have is just below the 78.6 level right here. Now I don't get in at the 38% level. I obviously miss out on some trades because it does plenty of times hit 38 and go hit the 1.146 level. But I look to get in when I do take this trade. I don't take it every single time. When I do take the trade, I try to get in lower than the 50% right here, usually around the 61.8, which is usually around right here, either that or the 50. Because the 50% right here, if you take it up to the top, right there, that's what a 397 tick move, And then if you have your stop loss right down there, it's about 224, 220 or something like that. So you'd be looking at this a 1.5 to 1 risk reward ratio. But then if you wait closer to get to the 61.8 and you do it, you'd be looking at 487 versus about a 135 right there. So you're getting close to a 3 to 1 ratio, which is obviously even better, because then you only need to be right about 30% of the time for this trade setup to be profitable for that one right there. So that's how I do it when I do take that trade. And then also to the downside, you also do have a short side setup, which has not been hit yet to the 38% line. So when price does hit the 38%, since we did have that 50 right here cross over that 200, that could be potential short. But since there's just a lot of noise going on right down there, I'm not looking to take either of those setups either way for it right there. I'll just be looking for the 5-way move going into the market tomorrow. So that's that. Take care out there. Talk to you later. Bye.